Hey everyone, welcome back to Corporate Decoder, the place where we try to understand how companies tick, and today we are diving deep into Kroger's latest financial report, a real page-turner for anyone interested in the grocery giant. This report, filed with the US Securities and Exchange Commission, gives us a peek behind the curtain at Kroger. Financial health for the quarter ending the 16th of August 2025. It's a deep dive into their sales profits and where all their money is going. We are going to cut through the jargon and tell you what these numbers really mean for the company and for you as a consumer or investor. Let's start with the big picture, the income statement. In the second quarter ending the 16th of August 2025, Kroger brought in sales of close to $34 billion. That sounds like a lot, and it is, but it is a tiny bit more than the same quarter last year. Now, for the first two quarters of 2025, total sales were just over $79 billion, which is slightly less than the same period last year. This slight dip in sales might seem concerning, but it is important to look at the details. When you take out fuel sales, which can fluctuate a lot due to gas prices, Kroger core grocery business actually saw sales grow. This is a really positive sign, showing that people are still buying groceries from Kroger. Identical sales excluding fuel and some other special items, which is a fancy way of measuring sales at stores open for at least a year, grew by 3.4% in the second quarter and 3.3% for the first half of the year. This growth is thanks to strong pharmacy sales and their online shopping or e-commerce business, which grew a whopping 16%. Now let's talk about profits. Kroger operating profit for the second quarter was about $863 million, an increase from last year. For the first half of the year, operating profit also went up, reaching over $2.1 billion. Management uses something called adjusted FIFO operating profit to get a clearer picture of the ongoing business performance. This measure also showed healthy increases, showing that Kroger is becoming more efficient in its operations. Looking at the bottom line, net earnings attributable to Kroger for the second quarter were around $609 million or 91 cents per share. For the first half of the year, net earnings were about $1.4 billion or $2.20 per diluted share. These figures represent a solid increase compared to last year if you look at the adjusted numbers, which remove one-time costs. The company is working hard to make its operations smoother and more profitable. Now, let us shift over to the balance sheet, which shows what Kroger owns and what it owes. As of the 16th of August 2025, the company had total assets of over $53 billion. Their cash and temporary investments were nearly $5 billion, a healthy increase from the start of the year. This strong cash position gives them flexibility to invest in their business and return money to shareholders. On the other side of the balance sheet, Kroger has liabilities totaling over $44 billion. This includes long-term debt, which is a significant chunk of their financial structure. While debt is normal for large companies, it is always something to keep an eye on. The company says they are committed to maintaining their investment-grade debt rating, which is good for their financial stability. Share owners' equity, which represents the owner's stake in the company, was nearly $9.3 billion. This is a good increase from the beginning of the year, reflecting the profits they have retained in the business. The cash flow statement tells us how cash is moving in and out of the company. Kroger generated a very impressive $3.7 billion from its operating activities in the first half of the year. This is cash generated from their day-to-day business operations, and it is higher than last year, which is a very positive sign. However, when we look at investing activities, we see that Kroger spent over $2.1 billion. This spending is mainly on property and equipment, showing they are investing in stores and infrastructure for future growth. They also received some money from selling assets, but overall investing activities used a significant amount of cash. Financing activities show how the company manages its debt and equity. In the first half of the year, Kroger used about $657 million. This includes payments on debt dividends to shareholders and share repurchases. They have been actively buying back their own stock, which can increase the value for remaining shareholders. Now, for the section where companies talk about potential problems or risks, Kroger has a number of ongoing issues. There are ongoing lawsuits related to opioids, and the company has agreed to significant settlements which will cost them hundreds of millions of dollars. This is a major financial impact, and it shows the complexity of managing a large corporation. Another big story is the terminated merger with Albertsons Companies Incorporated. This deal fell apart, and now there is a legal battle between Kroger and Albertsons, with Albertsons seeking a large termination fee. This situation is ongoing, and its outcome could impact Kroger's finances. Kroger also mentions various risks that could affect their future performance. These include economic uncertainty, competition, labor negotiations, and potential cyber attacks. These are standard risks for any large retailer, but it is good that they are transparent about them. Looking at the executive summary, Kroger seems pleased with their performance, highlighting strong sales growth in pharmacy e-commerce and fresh products. They are focused on simplifying the company and improving the customer experience. Their strategy built on fresh, our brand's personalization, and e-commerce appears to be working. Kroger has a clear strategy called its value creation model. They plan to grow sales by investing in their stores and improving their online shopping options. They also aim to increase profits by controlling costs and growing their alternative profit businesses. This balanced approach should help them deliver good returns to shareholders. The report spends a lot of time explaining what they call adjusted earnings. This is basically taking out all the one-time costs and gains to show the underlying performance of the business. For example, they remove costs related to the merger litigation, opioid settlements, and store closures to get a cleaner picture. This is a common practice, but it is important to understand these adjustments to get a true sense of profitability. Their adjusted earnings per share showed a healthy increase this quarter. When we look at liquidity, Kroger appears in good shape. They have nearly $5 billion in cash and temporary investments and access to credit lines if needed. They are generating strong cash from their operations and appear well funded to meet their obligations and invest in the future, including returning cash to shareholders through dividends and share buybacks. So what is the overall story here? Kroger is navigating a complex business environment. They are facing significant legal challenges like the opioid settlements and the Albertsons merger fallout. These issues have financial implications and introduce a level of uncertainty. However, their core retail business is performing well with strong identical sales growth driven by key areas like pharmacy and e-commerce. They are investing in their stores and operations, indicating a focus on long-term growth. The company's management seems to have a clear strategy for profitability and shareholder returns. While the legal battles and debt levels are points to watch, Kroger's core business health and their proactive approach to efficiency are positive signs. Alright, that is our breakdown of Kroger's latest financial report. What are your thoughts on their performance and the risks they are facing? Let us know in the comments below. If you found this deep dive valuable, please hit that like button. It really supports the channel, and subscribe for more corporate analyses. Also join our Discord community linked in the description for more discussions. Thanks for watching, and we will see you in the next episode of Corporate Decoder.